An investment in knowledge pays the best interest. Ben Franklin. My friends, make that your motto for this next year and invest in knowledge. Every single day, 10 to 15 minutes, that is all we ask. Following these markets, learning how to read stock charts. Think of what that offers you in your future, for yourself, for your family, for your loved ones, if you can learn how to read stock charts. I am all for fundamental analysis, all for that. But my friends, technical analysis, which is what we do, is so important because even if a company is worth X amount of dollars, you don't want to pay the premium when you don't have to. You don't want to buy high and then sell low and take losses. The beautiful thing about teaming up fundamental analysis along with technical analysis is you're buying at the right price. It's the difference between going in to the car dealer and paying what's on the sticker as opposed to what you know the value of the vehicle actually is and what you can pay for it. Who wants to pay retail when you don't have to, or an inflated price? That's what we're all about. I want to wish you all a happy new year. This is our last broadcast before the new year. Markets are not open in the States on New Year's Day, so happy new year to everyone. This is our weekly review and forecast from Monday the 4th of January. Let's jump into these charts. Everything up for the day. The S&P up 0.56%. Now, as we hone in here to see what's happening, we can see that we have reached a higher high, that price is above the weekly trend line. Price percent oscillator is gaining momentum, heading up, pulling away a little bit from the red signal line. Derivative oscillators gaining a little bit of momentum. Go to the 2-day chart. Now remember, this is a completed 2-day candle now. It's still, though, in the negative when it comes to the price percent oscillator and the derivative oscillator. Price percent oscillator does look like it's heading up a little bit. Derivative oscillator losing downward momentum, so we're waiting potentially for a 2-day recross. That hasn't occurred yet, so we're not in a trade on the S&P. We look at the half-day chart. Little lackluster in the morning, up in the afternoon, boomed a little higher, settled out, up 0.56% for the day. So what are you looking for over the course of this next week to see if there's going to be a 2-day recross going up? Because remember, the 2-day crossed over going down back on Monday, the 21st of December. Hasn't recovered yet. So that took us out of that trade. We're waiting to see what's going to happen as we move into the new year. Leaving the S&P, going to the Qs, the NASDAQ 100 up 0.25%. This is a trade we are in. And in fact, we reached a higher high this week. Price percent oscillator slowly trying to pull away from the red signal line. It is above it. Derivative oscillator gaining upward momentum. Price above the weekly trend line. Go to the 2-day. Again, pretty much flat. It's been flat for a while as things have been trying to move higher. High for the week, 114.40, 314.49, 314.68. I'm sorry, not high for the week. Well, that is the high for the week. That was actually, though, Monday and Tuesday. This latest candle, Wednesday and Thursday, not reaching a higher high on that 2-day candle. But that price percent oscillator heading about flat. Derivative oscillators, what's heading up. So we'll continue to watch prices above that 2-day trend line. We could draw a better one probably now. We'll see about bringing that a little more up to focus. There we go. That's a little more updated. Looks pretty decent on the 2-day. So we're still in that trade. Now remember, we had that weekly vertical crossover, and again, it was a bit of an iffy one. That, of course, occurred on December the 18th. We're finishing our second week after that crossover. Jumping in point, again, using these Heiken Ashis, not the best way, but it was somewhere around the 307 mark to where did we go to? A high of 314.68. So again, not bad, $7+, not bad. So we'll continue to keep our eye on things, see how that goes. Of course, we look at the half-day chart. That's where we see things down in the morning, up a little in the afternoon, as things really topped earlier and are just sliding sideways. So keep your eye on things. My friends, I do not know what is going on the page here. Having something strange happen. I don't know what that was about. That is odd. Anyway, thank goodness it stopped. It just popped up. You know what? I did spill some coffee on my machine this morning, and I did spill it on the A letter on my keyboard. Not a good sign. The good news is I do have a new computer I'm going to be switching over to. Same computer, but same type of computer, same Apple. But maybe that's the tell for me to get that done. Hopefully that's not going to pop up again. We're going to leave stocks and we're going to go to bonds. Bonds up for the day, 0.15%. What do we see going on there? Well, as we end the week, we have a solid green spinning top. Now, that is not a green up candle. That is a slowdown in the down movement. You can see that happening. We hadn't reached a lower low, and the movement slowed down. Prices above the weekly trend line. Price percent oscillator flat, still negative. Derivative oscillator losing downward momentum. Go to the 2-day. Of course, that 2-day crossed over going up all the way back on the Friday, the 11th of December. And has sort of been tracking sideways really since then. We look at this latest 2-day candle. It is a green up candle, the biggest green up candle we've seen since that crossover going up back on the 11th of December. So we see the price percent oscillator heading up. Derivative oscillators popped over positive. So we'll continue to keep our eye on things on bonds. On the half-day chart, up in the morning, a little further up in the afternoon. Like we said, overall, not much, 0.15%. But what are we waiting to see happen in bonds? We're waiting to see if this down move's going to end or if there's going to be a 2-day recross going down. It got close to happening back on Wednesday, the 23rd of December, but didn't, bounced off the red signal line heading up. So again, we have that schizophrenia. Weekly chart down, 2-day chart up means we don't have a trade. We're waiting for things to sort themselves out when it comes to bonds. Lastly, we go to gold, up 0.36% for the day. Fourth week of up movement in gold. Fourth green candle pushing through that weekly trend line. Now gold crossed over going down back on Friday the 11th of September. And in fact has sort of trundled down until the last 4 weeks. Still negative as far as the price percent oscillator and derivative oscillator goes, but the price percent oscillator is heading up. Derivative oscillator losing downward momentum. That 2-day chart crossed over going up back on Friday the 11th of December. Then sort of flat, that next 2-day candle popped up for 4 days and then sort of sliding sideways and gearing up. Since then, we see that price percent oscillator heading up, derivative oscillator, this latest 2-day candle, gaining some upward momentum. It had been losing it until now. And right there on the weekly trend line heading up the 2-day. I am hoping gold is going to rotate over, going up here soon on that weekly chart, so I can start riding it. It has not yet. Half-day chart, it crossed over going up back on Wednesday morning, the 30th of December, and we will update our trend line accordingly and connect a few candles there. Nice trend line heading up. Price percent oscillator spiking up. Derivative oscillator heading up. So again, hoping the new year will give us an opportunity to jump back into gold. We're just waiting for the weekly vertical crossover going up. Lastly, my friends, told you to keep an eye on silver. Silver down for the day, 0.77%, hoping it was going to bound up and maybe give us a weekly vertical crossover. Hasn't happened yet. But again, you know we tracked silver for a while earlier in the year, trying to teach you about that chart. And I've just been looking at it lately, waiting to see if there's going to be a good practice trade coming up in silver. And maybe at the beginning of the year, we'll see it. Maybe not. We'll let these charts lead us. If you haven't purchased our book, treat yourself with the new year coming by charting your way to wealth. I am working on the 3rd edition, which is going to be a hyperlinked electronic book. But of course, you buy our current book, we will send you a copy of the electronic version for free. In fact, I'm going to send that out to everybody who bought the 1st and 2nd editions. But please, the fact that I'm working on a 3rd edition, don't let that stop you from buying the 2nd edition. You need to get it. You need to get this knowledge in your head sooner, the better. And I'll send you a free version of the 3rd edition when it comes out. That's 1st and 2nd editions are, of course, hardbound. They're spiral bound, but they are real books for you to have. So I want you to have that. Again, follow the link in the show notes. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters. Happy New Year.